Alright, so as the title suggests, today's video is going to be all about failed auctions, how I think they're the best setup to trade when it comes to Bitcoin, and how it relates to the price action we are seeing right now on the charts. So let's get into how to properly trade a failed auction, because there's a lot of misinformation on YouTube as to what actually confirms a failed auction, and it is not that price just swings out of the volume range, TPO range, and then swings back into it, creating a wick. While yes, those are where failed auctions are formed, that does not classify a failed auction. That could also be a finished auction, or it could even be an unfinished auction, indicating that that wick still needs to get swept, and putting your stop at the end of that wick and entering on that position would actually be a bad idea. So in this video, we're going to talk about the setups required to actually trade these failed auctions, because just that Bitcoin has a candle with a failed auction within it, if it's not at a technical level with a structural edge, there's no reason to take the trade. So let's start off with the basics. What is a failed auction, and what do you need to be able to see a failed auction? And the answer to the latter is that you will need a paid trading software. Your best options are going to be Exocharts or Trading Light, which is what you're seeing right now. And you can see, if we were to zoom into these candles, these are not your normal candles. This is what you would call a footprint chart, which shows you the actual buyers and sellers within a candle on this profile here. You'll see on the left, these are your sellers. On the right is your buyers, and this is the only way to identify a failed auction, is using an actual order flow chart. And if you are serious about trading and interested in buying any of the software, I do believe Trading Light is a great value. It's only like 20 bucks a month. Definitely get the gold version so you can access the perpetual futures Binance pair, which is where all the volume is, as well as your perpetual Bybit pair, which is where your smart money is going to be acting. So you can kind of use both of these as confluences. And I do think the software is kind of a must for trading, either this or Exocharts. But if you do want to go with Trading Light, I got a link in the description down below that will give you $10 off your first month. And I'm not actually affiliated with them. I just went to their website and got an affiliate link for you guys. So essentially, we both get just $10 in store credit. I'm not getting any actual real money from you using that. So yeah, just had to mention that. I do actually think the software is worth the money. I've been using it since before I even started the YouTube channel. So I'm not showing it just because I have an affiliate link or anything like that. No, it's truly the best software when it comes to trading Bitcoin. So now that you kind of understand the charts we're going to be using and what the candles look like, let me actually draw out that failed auction structure for you. So let's say you have, your candles coming at the top of a range. And once price approaches the identified level we will talk about in this video, let's say you have a sweep level right here, price will then wick through it. This is going to be where your failed auction actually takes place, within the upper wick of this candle here. And what would denote this as a failed auction is that the further you go up this wick, the sellers actually decrease and the buyers increase, with a big imbalance at the top. So let's say we have, let's say 50 Bitcoin being shorted at this level on the wick versus 10 here. And as we go up this wick, you will see buyers increase, right? It doesn't have to be exact. There can be a little bit of deviation in here. But at the very top of this wick is what we want to be looking for. Do we have 0 sellers and 100 Bitcoin being longed, creating a massive imbalance, and then price rejects that level? Because that is a failed auction. Whenever you have a buy imbalance at the top of a wick, and then price fails to actually continue in that direction, that's the definition of a failed auction. Now, does it have to be 100 Bitcoin to 0 Bitcoin? No, it could be, let's say, 2 Bitcoin here and 55. It doesn't have to be that strong. It could be 12 here versus 80 here. And then maybe we continue this wick up a bit. And as we go up further, then you do see it continue to get stronger, right? And this creates a stronger failed auction. Maybe you see something like this. This would be a very good failed auction to trade. And as soon as you see price reject off of these buyers trapping those longers, you can enter your trade almost immediately. Just mark it in with your stop at the top of the wick. But that will take a lot of planning and practice to be able to enter that quickly, because when these wicks form, it is grabbing liquidity, and when liquidity gets grabbed, it happens in the blink of an eye. So yes, you have to have a lot of practice to be able to time entries like that. But we'll get into a much simpler way to actually enter these positions later on in the video. I just wanted to give you guys a good representation of what actually constitutes a failed auction. Basically, buy imbalances at the top of the wick, and then price rejects off of that wick and starts making lower lows. But as I discussed at the beginning of this video, you do not trade every candle that has this imbalance on it. You only trade this when it sweeps an identified level and closes back below. So let's go ahead and jump into the chart. Before we talk about the failed auctions, we're going to talk about sweep levels, because these are the levels you want to be taking the trades at. And to identify these levels, we will be using good old TradingView. Jumping in here, you can see my chart is very complicated. This is periodic volume profile, session volume profile, Treasuries Reality main for vector candles, fair value gap indicator, and a smart money concepts for order blocks. So this gives me all of the different volume and imbalance levels within the chart that we can use to identify a good zone to take a long or a short, and where we would want to actually trade these failed auctions. Not only that, but you will want to identify poor highs and poor lows, along with sweep levels, liquidity levels. This is something I preach on the channel. You take trades on swing failure patterns above sweep levels. That is the best way to trade, in my opinion. And to dumb it down to surface level, how you find these is essentially identifying wicks that are around the same level. So I went ahead and actually removed my sweep levels real quick, and we'll start back here in April and just work our way forward and identify those sweep levels. So as you can see here, we have a previous day value area high that is untested and is right at the top of two wicks that are right next to each other. This is 100% a sweep level. So what I will do is take a horizontal ray that's like a dotted line. Right, this is essentially what I use to mark out my sweep levels. You can use whatever you want, but I do recommend rays, so you can actually put it right at the wick that you are marking out. So that would be my first sweep level. Coming down further into the chart, you can see all of these lows down here are right at the same level. So, we can mark that out as a sweep level using our horizontal ray. Coming up to these highs here, you can see, these are all around the same level. We'll identify that as a sweep level. Coming down throughout the chart, these lows are all pretty good. Nothing really screams sweep level to me. These lows down here, if we were just being like very surface level, you could say that's a sweep level. But the way that this formed, right, if we go to a weekly time frame, this is actually a weekly deviation, so this is not really a good sweep level. The chart does not need to go back down to that low, because, let me get all the way back over here. You see the weekly time frame deviation back within the range. So that's actually a very good low. I would not expect that to get swept. Whereas these other lows that we had were actually sweep levels on a weekly time frame. You can see all of these weekly wicks down to the same level. They needed to get swept. We then did sweep it. So even though it may look like a sweep level on the hourly time frame, we know how that formed. So I don't think that needs to get swept. Coming back up to the top here, we made highs at around the same level throughout this range here, and then we swept, deviated out of it, and then came back under. So this was actually good, right? This is not a sweep level, this high here, so we don't really have to mark anything out quite yet. You could say this is a sweep level, right? Two bad highs along with, this high and the imbalance of that vector candle. So yeah, you could have marked that out. At the lows here, this is a nice solid uptrend. Those aren't wicks down to around the same level. I wouldn't consider that a sweep level. You could say, these highs definitely were, though. And that's how I knew that when we were in this range here, it was more likely we were going to squeeze up to the upside. And for example, right here, when we squeeze through these wicks, price does not swing fail. And that is absolutely something to take note of. Just because you have a sweep level does not mean that price needs to sweep it. It is just a level where you can get a swing failure pattern. And if you get the swing failure pattern with a failed auction, RSI divergence, liquidations, that sort of thing, then that's your edge to take the trade. A sweep level on its own is not nearly enough edge to actually take a trade. You don't just blind limit a sweep level. As you can see here, we grabbed the liquidity and kept on going. This was bullish continuation to the upside, so this sweep level is now invalid. You only trade a sweep level if it gets a deviation back under the level after swing failing to the upside, as happened right now on the price chart. You can see these highs right here were around the same level. They needed to get swept. It was also previous day naked point of control all the way from back here where we created this other sweep level, right? We had this naked point of control coming all the way out here. We knew it was going to act as resistance. So you could say, hey, I know there's big volume resistance up there. If we swing out and grab the liquidity from these highs here and then reject off of this value area from the previous day, then I would take the short on that sweep level. So that's how you use these levels to kind of plan for your trades. So jumping back over here to Trading Light, these yellow dashed lines are the same sweep levels we were looking at on TradingView. You can see this first sweep level, we did in fact have a swing failure out of it and got back within it. and you would have a lot of YouTubers that would call this a failed auction. Like, look, fast price up into this range, price then could not accept it and got back under sweep level. This is a failed auction. But we know if we look at this footprint chart, there was still auctioning going on at this level, creating an unfinished zone and invalidating our trade. We would not want to take a short. Even though we had a structural edge with the swing failure pattern, the order flow told us that there was still unfinished business above the sweep level, and we were going to go sweep it one more time. You can see these are actual walls in the order books. There's like 1,000 Bitcoin short position being limited into the order books. He was hoping to get filled on this sweep, which potentially would have created a failed auction. But when price was not able to fill his order and he saw that there was unfinished business up at this level, he went ahead and removed his wall because this is no longer a valid trade to take. And with that unfinished auction, I would go ahead and put a sweep level right at the top of that wick, because you know there is a lot of stops now at this level from retail traders that thought that was a good short to take. So you mark that out as another sweep level. Going along here in the chart, you can see we got up close to it. Again, not a failed auction, right? There's still unfinished business above these wicks. That's just creating more liquidity to the upside. And then finally, today, we went ahead and we did in fact sweep it, closing back under. And what you see at the top of this wick is a failed auction. 106 Bitcoin longed versus 6.9 Bitcoin being shorted at the top of this wick, and price is not able to accept above, which indicates that price is truly bearish and these longers are now trapped at the top of the wick and price is likely to go down from here. I will say though, this was not a perfect setup, right? Because we still have liquidity above your like 68K level. The failed auction wasn't very violent, right? A lot of the times when you get a failed auction, it will be violent, as in you will get, you know, the 5 versus 100 Bitcoin, and then above it you'll get like a 0 versus 500 Bitcoin. You know, down here you might get like a 7 to, let's just say 50, right? It's more violent. You have a lot more failures going on within the level, indicating that the zone is truly finished off and price does not want to accept up there. But that being said, I mean, this is a valid failed auction at a sweep level. Although because it wasn't that violent of a sweep, you didn't have really confirmation to just mark it in on the failed auction. A lot of the times I will do that. If we do see, you know, much heavier longs versus shorts at a level and then price reverses, I will almost instantly mark it into that position with my stop at that wick, creating an extremely favorable risk to reward setup. But because it wasn't that clear on the fail of the auction, you would have wanted to wait for price to accept back underneath the sweep level and close below. You can see we start getting 15-minute closes below the sweep level. This is your signal to either short the sweep level or pull fib high to low here and short a fib level. Normally I will go 5.8 to 7.86, but in this case you can see price didn't even get up to your golden pocket. It rejected off the 0.5. So, you know, you can ladder in all the way from, let's just say, the 382 to the 786 and just stagger orders in here. So at least, you know, part of your position is going to get filled and your risk to reward is still going to maintain a good edge. And the most important thing is no matter which fib level you choose to enter a position on, your stop has to be either just above the top of the wick that you pulled your fibs from, or at the wick, or you could do just below the wick, 886, something like that. Your stop should not be anywhere above these levels. No, because this is your invalidation. If price were to come up and sweep this level that is higher up, that's fine. You can just re-enter the position using the same strategy and putting your stop at the top of this wick here. You always need to keep a tight stop no matter what trade you're doing, and you need to expect that stop to get hit and not be bothered by it, and just be ready to re-enter whenever you do get another good setup, because if you have an edge on your setup, you will make money over time even if you're not winning every trade you take. It's just a game of probabilities. You will never always be right. So yeah, that's essentially how you enter failed auction setups. Does that mean that Bitcoin is going to nuke down to 12K now? No, it just means that Bitcoin could pull back down to that daily EMA I talked about a couple of videos ago. You know, we are seeing buyers step in. You know, you see these like 500 Bitcoin buy walls going from 65.5 to 64K. So, you know, I would not expect Bitcoin to get below, let's just say this wall down here at 63K within the single prints. That's a big imbalanced zone. I would not be surprised if this level gets swept, because I'm sure a lot of stops are here. So that might be the play, right? Just come down here, sweep this, he gets his order filled, and then we head on up from there. Jumping over to TradingView real quick, this green box that I have on my chart here is something that I put in manually based off of the visible range volume profile you can see of this entire range here. So you know, we could easily bullishly backtest this box as well as that is around your daily EMA any further, but there's a good chance we don't even go down that far at all and we hold a higher low here, because as you can see, price is making higher lows currently while RSI is making lower lows. That is a hidden bullish divergence, and hidden bull divs tend to play out more than regular bull divs, especially on a higher time frame like an hourly and 4-hour, which we are seeing right now. So yeah, I definitely don't think it's the time to be bearish on Bitcoin. Not only do we have a bullish edge right now, but this sweep happened during the weekend. And if you're a trader, you know that highs and lows that are formed on the weekend almost always get swept sometime during the week. So if it is truly bearish, what we need to be watching out for is if price were to come up to 68K, sweep that level during the London or New York market session Monday or Tuesday, that could create a much more valid swing fail, grabbing all of the liquidity, and then I'd be more worried about a top coming in here for Bitcoin. As of now, I still remain extremely bullish on the markets overall. This is just a talk about failed auctions and my favorite trade setups to take when it comes to Bitcoin. And if you do have any questions about anything I talked about today, make sure to join my Discord. Link is in the description down below. But with that being said, thank you all so much for watching, and I'll see you all in the next video.